So I'm sitting here with Dusten Renshaw from Apex Insurance. We caught up recently over coffee and I really enjoyed what we talked about, and I think it's really important for SMEs. Dusten, I want to pick your brains about the sorts of risk that SMEs face and what we can do about it sooner to protect them.
Cool.
Talk to me about people who are in business partnership.
Yes, thanks, Gemma. I'd say something that we come across more often than not is people spend a lot of time working on their business, which is great, growing it, but very little bit of time protecting it and doing all the little things around their business to make sure that if something goes wrong, everything stays safe. One of the biggest areas in that space is not having their shareholders agreements done or drawn up, and not protecting for debts in the business, or not understanding how their personal guarantees affect their families or business partners in the business. So that's really, really common.
And so that's not the sort of thing that just applies to big business. It's,
No, not at all. Interesting you say that. It's probably more so smaller businesses, right from your sole trader right through to sort of 2 to 3 man size businesses.
Man or lady.
Man or lady, sorry. That's where the real risk is. Quite often large businesses or corporates, they have mechanisms in place to sort of work around those things, but the real at-risk businesses are the smaller ones that are at risk the most.
One thing that really resonated with me when we were talking was we discussed a scenario if one of the shareholders or directors passes away, a shareholder agreement would apply as sort of like a will for the business, an arrangement between the owners as to what would happen in that event. Are you going to find yourself working with a grieving widow who suddenly wants to know everything and get involved, or who handles the debt of the business and the mutual insurances? How would that apply?
So how it's set up, you have your shareholders agreement, which we refer to that as an attachment to that agreement called a buy-sell agreement. What that says is that if you've got two shareholders in business together and someone passes away, it tells the surviving partner, and it also tells the executor of the deceased estate, what's going to happen, who's going to get what, how's it going to work. The nice thing about having that agreement is that it's in black and white. So when something does go wrong, there's no uncertainty. Where the insurance fits in is just funding that agreement. So let's use you and I as an example. We're in business together. I pass away. You don't all of a sudden want my wife as your new business partner. And she probably wants money for my shares. She doesn't want to be in business. So our agreement says that if I pass away, my estate will sell you the shares and you will pay my estate in return for those shares. As I said to you earlier, the insurance is the funding part of that agreement, which says, alright, it tells my estate, right, you now have the liquid capital, the cash to actually go and say, there you go, and complete the transaction. It's a little bit tricky. It's good to have an agreement. A little bit tricky if you don't have the insurance part in place, because how we're going to fund it. And vice versa. It's all good and well having the insurance in place, but if there's no agreement, well then what's to stop my wife taking the money and saying, oh, I'm your new business partner. So the agreement is the really, really, really important part to stipulate what happens and make sure that transaction is as smooth as possible process.
And the insurance, I suppose, would be comparable to how my husband and I have a policy over each other. Business partners I would get paid out upon your death, and then I would, as per the shareholder agreement, I would pay that to your estate in exchange for the balance of the shares of the business.
Correct. Like mum and dad have a life insurance policy on each other to cover the mortgage at home. That's what business partners have in place with each other to cover the value of their business.
And then no one's left holding the bucket when it comes to the debt, and there's no confusion when you're feeling emotional about the situation you're currently found in and having to make decisions about everything. It's all thought out when everyone's clear-headed and...
Yep. So you've brought up something interesting as well, which is another component. You've got the value of your business, which is one component, and then you've got the debt, which is another component.
Mm.
The debt's really, really important because that has to be taken care of.
Mm.
And the last thing that you want is for me to pass away and personal guarantees are put in place, and then all of a sudden either my wife's liable for our business debt, or they'll come to you for personal debts that I have. There's many, many different scenarios, but taking care of debt is ultra important because it protects you as the surviving shareholder, and it protects my estate, from any guarantees that we have in place with each other. So it's really, really important. Many, many people aren't aware of that.
Yes.
To settle the debt first and then take care of everything else.
I can see that being really useful information for our SME clients. So what I'm going to do is I'm going to leave some contact information for Dusten, so you can extend the conversation if you want to. I think you should consider whether or not you've got those protections in place and whether you've had those hard conversations with your business partners and your other half so that everybody's on the same page about what to expect in the worst case scenario.
Thank you very much, Gemma.
Thank you, Dusten.